Hello guys, welcome to my YouTube channel Make It Simple. In this tutorial, we'll try to simplify life insurance policies today. There are some basic things that we should know so that you will not be in requirement of any kind of agent for these policies. So let's try to simplify these life insurance policies. We'll start with example. For example, I want a sum assured of rupees 25 lakh. Sum assured is the amount that your nominee will get in case of your natural or accidental death. For example, I want a sum assured of rupees 25 lakh. My age is 28 years and I want to get insured up to the age of 60, that is 32 years of my life. So I have broadly two options of LIC policies. First option is term insurance and the other one is regular plans or traditional plans. Term insurance means to get this benefit, I will need to pay some amount to the LIC company or any other life insurance company called as premium. So to get this benefit, I need to pay some amount called as premium. In case of this happening to me, my nominee will get this much of amount in case of natural or accidental death, both. If nothing happens to me, I will not get anything back. This plan is called as term insurance. Regular plan is something different. Regular plan, I need to pay premium. In case of this happening to me, my nominee will get this much of amount. And if nothing happens to me, at the age of 60, I will still get some amount back called as maturity amount. So this is the broad difference between term insurance and regular insurance. In term insurance, maturity amount is zero because term plan or term insurance gives you only risk cover, while regular plan gives you risk cover and also a kind of saving. So we'll try to analyze which is better, term insurance or regular insurance. So this is my requirement. So as like every other individual, first I went to LIC policy to get LIC policy. So this is liconline.co.in website. I have converted it into PDF form. So I went to online lic.co.in website and I was in search of policy, the policy which will provide me my requirements. So I ended up with this LIC New Jeevan Anand policy. This is a famous policy. In this website, there is one premium calculator. You have to just enter your details. Age is 28 years. Term is 32 years. That is up to the age of 60 and sum assured is 20 lakhs. So let's see how much premium I need to pay. So for age 28 years, I need to pay 64,000. In case of natural death, my nominee will get 25 lakh 96,000. In case of accidental death, my nominee will get 45 lakh. At the age of 29, I need to pay again 64,000. I need to pay this premium for the up to 32 years of my life, that is up to the age of 60. At 29th year of my age, my risk cover gets increased as per this policy. So my risk cover now is 26 lakhs. Previously it was 25 lakh. And my accidental death cover is 46 lakhs. Previously it was 45 lakh. So as your age increases, your risk cover also increases. At the age of 59, my premium is same. In case of natural death, my risk cover is 55 lakhs 72,000 and accidental death cover is 75 lakhs 72,000. And if nothing happens to me, I will still get some amount called as maturity amount. This is 81 lakhs 72,000. We'll continue with our PPT. So, as per my requirement, I found this LIC New Jeevan Anand policy. I don't want to endorse any kind of policy. I don't want to defend any policy. This is just for example. So to get this benefit, I need to pay yearly premium of rupees 66,000 for 32 years. So as we have just seen in our PDF file liconline.co.in, to get this much of benefit, I need to pay yearly premium of 66,000 for 32 years. Now let's analyze this whole policy. We have three boys, Mr. Blue, Mr. Red and Mr. Green. Mr. Blue both and Mr. Red and Mr. Green, all of them are ready to spend rupees 66,394 a year for 32 years of their life. And all of them want some kind of insurance and all of them want a saving also. So let's see what they are going to do with this much of amount. So Mr. Blue decided to go for this policy, LIC New Jeevan Anand policy. And let's see what Mr. Red and Mr. Green want to do with this amount. So we'll try to analyze. Our tutorial starts here. Okay, so we have Mr. Red with us again. So as we have seen earlier, he is ready to spend rupees 66,000 a year for 32 years of his life. Now he wants natural and accidental death cover of rupees 75 lakh. So again he went on searching for LIC policy, and he again went to online lic.co.in website, and he found there is something called LIC e-term policy. So again he went to premium calculator. Age is 28 years, term is 32 years of life, sum assured is rupees 75 lakh rupees. For this sum assured amount, Mr. Red will need to pay rupees 11,376 rupees. Term is 32 years, that is up to the age of 60. The amount of premium is 11,000, without tax it is 10,000 rupees. So in case of natural and accidental death, nominee will get 75 lakh rupees at the age of 28 years. As the age increases, the risk cover does not increase, the risk cover will be same, that is 75 lakh rupees. So if nothing happens to Mr. Red, what amount he will get? He will not get anything. Maturity benefit is rupees 0. This is a term policy. So this is the difference. As we have seen in earlier policy, LIC New Jeevan Anand policy, you get maturity benefit, but as this is e-term policy, E means internet term policy, you have to apply for this term insurance online. So to get this benefit 75 rupees, you need to pay this premium of rupees 10,000 a year. So as you can see, the premium amount is also less. This is only 10,000 as compared to previous policy, but in previous policy you get this maturity benefit. So Mr. Red decided to go for this policy. Out of 66,000, he is ready to pay 11,000 rupees for a risk cover of rupees 75 lakh. He decided to go for LIC e-term policy, for which he needs to pay rupees 11,000 for 32 years of life. But now again he is left with rupees 55,000, and he again went on searching where he can invest this 55,000 rupees. So he went on searching something called a PPF calculator. He decided to invest in PPF. PPF is Public Provident Fund. So he went on searching PPF calculator. So there are different PPF calculator, you can use any one. So let's go with this ICICI Bank PPF calculator. In this PPF calculator, you need to enter your current age. Current age is 28 years. You are ready to pay once a year, that is yearly subscription. You are ready to pay, that is Mr. Red in our example, he is ready to pay 55,000 rupees a year for 32 years of his life, and calculate maturity value. The maturity value is 92 lakh rupees 33,000. So Red decided to pay this much of amount, that is 55,000 in PPF, for which after 32 years he will get 92 lakh 33,715 rupees. We are taking this as an example. In PPF you have to you will get this much amount after 35 years, because there is a block of 5 years. We will see about PPF in another tutorial, but this is the amount you will get if you invest rupees 55,000 for 32 years of life. This is 92 lakh rupees 33,000. So we'll see what Mr. Green wants to do with this 66,394 rupees. Now we have Mr. Green with us. Mr. Green wants insurance of rupees 75 lakh. Now instead of going to online lic.co.in, he went to Policy Bazaar, Policy Dunia like websites, and he found there are some of the life insurance companies. The companies are ready to provide him an insurance of rupees 75 lakh with this much of amount. He again went to Google searching for some life insurance companies, and he found ICICI is also there. The company which is ready to provide this much of insurance with this much of amount. But what is the authenticity of these life insurance companies? All these life insurance companies are regulated by Insurance Regulatory and Development Authority of India, that is IRDA. So LIC and all these life insurance companies, private life insurance companies, are regulated by IRDA. So there is nothing to worry about this. No one will take your money and run away. No one is going to do that. So Mr. Green decided to go with this option, that is with 7048 rupees he will get IRDA approved company's insurance of rupees 75 lakh. Now he is left with this much of amount. So where he will invest this much of amount? So now he went to this website, Aditya Birla, that is Birla Sun Life Mutual Fund. In this website they have given expected rate of return for different modules of investment. For equity mutual fund, the rate of return is 14.72%. For PPF it is 8.7%. For 14.72%, this is the source of information. So Mr. Green decided to invest in equity mutual fund. So how much amount he will get at the end of 32 years? So he went on searching SIP calculator. So this is the SIP calculator, you can use anyone. So Mr. Green decided to invest this much of amount 59,000 for 384 months, that is 32 years of his life. Expected rate of return instead of 14%, you will assume the expected return is 10%. So with this much of amount, he will get this much of return, that is 1,37,000 rupees, and this is the investment amount, 18 lakh rupees. So at 32 years, that is at the age of 60, Mr. Green will get a sum of this much of amount. So again back to our PPT. So for 59,346 rupees invested in equities for 32 years, the final amount is 1,20 lakh rupees. So let's come to our final conclusion. We have Mr. Blue, Red and Green with us. Current age is 28 years. All of them are ready to invest 66,394 rupees a year for 32 years of their life. Mr. Blue decided to go with this policy, LIC New Jeevan Anand policy, and this is the benefit, natural death and accidental death benefit. If he survives at the age of 60, he will get 81 lakh rupees. Mr. Red went to LIC e-term policy and he will get 75 lakh rupees insurance. He invested the remaining amount in PPF at the age of 60, that is after 32 years of investment, he will get this much of amount. Mr. Green, he went to IRDA approved company with this much of amount and he will get this much of insurance, that is 75 lakh, and he invested remaining amount in equities. That is final amount, maturity amount is 1,20 lakh rupees. So here you can see the difference. So this is the bigger difference between different investment models. So if you invest separately, that is if you invest separate amount for your term insurance and separate amount in your investment module, so you will get a bigger benefit. So compare yourself and take your own decision. Don't just go for agents. Take your decisions wisely. It's your investment. It's your money. Thank you. I hope this will help. Good night.